there are a number of other big firms that are trying to use debt to take control of troubled companies. You might, now that you have more money to play with, start running more frequently into Oaktree, into Apollo, into Ares, into Blackstone. Is that a welcome challenge?
You know, we run into them all the time, right? But what we have found is, you know, for us, it's about what's our edge when we are running into an Ares or an Apollo.
So what is it?
When you buy debt from commercial banks, you buy debt from some of the high yield holders who own the debt. You can buy debt by going through Wall Street intermediaries, the famous Goldman Sachs trading desk. That's not a great way to have competitive advantage. We go through the Goldman Sachs trading desk, but we also call the banks and the loan funds directly. It's a mix for us. So when we are competing with some of the people you're describing, we get to it faster. And we get to it directly without an intermediary who is trying to say, you know, hey, if it's really interesting, I'll take 20% of it, right? So we are able to get to it directly. The other thing, the other difference which we have versus kind of some of the people you said, most people in the distressed business who look to kind of take control like that, including some of the names you mentioned, they are paper investors. They buy debt at a good price, hopefully. They restructure the debt in a restructuring process, and then they get equity and they sell it. It's paper. When you look at what we do, starting about 12 years ago, we started to set up operating teams, operating partners to work with these portfolio companies. A lot of times, we change management teams. The last group of people some of them ran it badly, put it into bankruptcy. We build new value creation plans to kind of fix those businesses, improve them. That's not something, 95% plus of the distressed business is paper investing, paper trading. So the fact that we can source so differently, you know, in a very enhanced way, the fact that we go out and operate businesses and everything I'm describing doesn't get built in 2 years.
You genuinely believe, and I don't doubt you, that you're doing more of that than they're doing. Because I look at an Apollo, for example, and I see a company that's not afraid of a messy restructuring with a lot of hair on it. And I also see a firm that has hundreds of billions of dollars to put to work, not necessarily in distressed debt, but they're awfully large. And surely they can, if they want to, pick up the phone and call any bank in the world or any fund in the world and try to source deals directly themselves. But they don't do it?
They don't. When it comes to sourcing, they are going, and please, I'm not picking on Apollo.
No, I understand. I use them as an example.
Right. I'm talking about the entire industry. Our entire industry is reliant on Wall Street as an intermediary feeding them. And if you can kind of, and of course Wall Street's really important, but at the same point in time, if you can supplement your efforts with the way I'm describing, it is distinctive. So a lot of people talk about taking control through debt. A lot of people. So few people, and by the way, I think our industry is Oaktree, Centerbridge, Avenue, Golden Tree, Diameter. I can go on with the list, right? That's our industry. That industry, a lot of it is focused on buying through Wall Street, and much of it doesn't really focus on operations. It's focused much more on investing in paper. And so if you can build, and the business which we are describing, it doesn't get built in a year or 2 years or even 5 years. To change the DNA of your investment team from being a paper-based investor to an operating control-based investor, it's just a DNA change which kind of takes place, right? So it's hard for people to just even look at us and say, boy, that's a good deal, I'd like to do it. It's hard to kind of do it.